Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. Yesterday, we had the crucial Federal Reserve meeting, which came out yesterday. The US markets, especially the Nasdaq and the S&P 500, reacted positively, with the S&P 500 and the Nasdaq hitting fresh lifetime highs. The Nasdaq ended on an extremely strong note, posting gains of 1.5% for the day, while the S&P 500 also clocked positive gains, marking a fresh all-time high of 5,447. Going ahead, the S&P 500 is likely to continue its positive momentum and test the levels of 5,520 followed by 5,600 levels. Only the Dow Jones ended relatively flat post the Fed Reserve meeting. Coming to the update regarding Brent crude. So Brent crude has failed to sustain above 83 levels and thereafter it has witnessed a minor correction. Going ahead, the 20-day EMA will act as a crucial support for Brent oil, which is currently placed in the zone of 81.6. Any sustainable move below the levels of 81 will lead to a downward journey. Now coming to the US dollar index, that is the DXY. So the DXY has witnessed a sharp correction after the FOMC meet outcome. It has cooled off by 0.54% and closed at 104.68 levels. Going ahead, any sustainable move below the levels of 104.25 will lead to further correction in DXY up to the levels of 103 in the short term. Now coming to the update regarding Nifty. So in trade yesterday, the benchmark index opened with an upward gap, hitting a high of 23,441 before witnessing some minor profit taking. For the past three trading sessions, the index is oscillating within 23,441 on the upside and 23,206 on the downside, and has been forming indecisive candles awaiting the Federal Reserve's announcement. At the current juncture, if we see GIFT Nifty is indicating a positive opening for us, so hopefully the momentum should lead to the index witnessing a breakout in trade today. If we see the technical indicators at the current juncture, so the daily RSI is in a sideways zone as per the range shift rules. The trend indicator ADX is currently quoting 16.4, which clearly indicates sideways consolidation or lack of strength, but hopefully we could see a bit of traction in trade today. Also, we have the weekly expiry for Nifty in trade today, so in the second half of the session the markets could be a bit volatile. Now coming to the update regarding the index. So in trade yesterday, 16 stocks witnessed long built up. We had 18 stocks which witnessed a short covering rally, 9 stocks witnessed short built up, and 7 stocks have witnessed long unwinding. If we look at the PCR, that is the put call ratio for the weekly expiry today, it is at 0.90, and clearly indicates an equal battle between the call writers both on the call side and on the put option side. If we see the option chain data, so we have 23,400 which has significant call open interest, followed by 23,500 strike, and on the put side 23,300 has significant open interest, followed by 23,200 strike. So going ahead for the day, the zone of 23,230, 23,200 will act as the immediate support for the index. Any sustainable move below the levels of 23,200 will lead to further profit booking in the index up to the mark of 23,050 levels. While on the upside, the resistance has shifted higher in the zone of 23,400, 23,430 levels. Any sustainable move above the levels of 23,430 will lead to a sharp upside rally towards the mark of 23,550, followed by 23,700 levels. Now coming to the update regarding Bank Nifty. So Bank Nifty on the weekly expiry, that is yesterday, marked a high of 50,233 and thereafter witnessed a minor cool off. Since the last three trading sessions, the index has been oscillating in a narrow range of 50,252 on the upside and 49,530 on the downside. On the daily scale, it has, if we see, it has formed an indecisive candlestick pattern for the third consecutive trading session. This clearly indicates indecisiveness among the market participants. On the derivative data front, if we see, the June futures has surged by 0.29%, and the cumulative open interest of the current, next and far series has dipped by 3.52%, which indicates overall short covering. If we see the option chain data, 50,000 strike has significant call open interest, followed by 50,500 strike, and on the put side we have it at 49,700, which has significant open interest. For the next weekly series, that is which commences from today, the PCR is at 0.89, while for the monthly series, June monthly series, the put call ratio is at 1.03. Going ahead, the range for, if you see, 49,600, 49,550 will act as the immediate support for the index. Any sustainable move below the levels of 49,550 will lead to further profit booking towards 49,100, while on the upside 50,150, 50,200 will act as a crucial hurdle for the index. Any sustainable move above the levels of 50,200 will lead to resume its upside rally towards 50,600, 50,900 levels. Now coming to the market indicators, so the volatility index India VIX has continued its downward journey. It has further cooled off by over 2% towards 14.39 levels, and is expected to extend its downward move up to 12.8. This clearly indicates that the overall market volatility has declined significantly. The advanced decline ratio was tilted in favor of the advancing counter. So we are seeing that even though the markets have been a bit sideways, there has been good traction which has been seen in quality mid cap and small cap counters. Now coming to the key sectors which are in focus. So while the broader indices have continued to outperform the frontline indices in line with our expectations, like I mentioned, we have the Nifty Mid Cap 100 and the Nifty Small Cap 100 marking fresh all-time highs in trade yesterday. Going ahead, it is important to remain stock specific and trade and invest only in quality names. So among the sectors which are witnessing good traction, we have Nifty Auto and Nifty Realty, which are currently trading at lifetime highs. The traction is expected to continue in these sectors. Coming to the FII DI data, both FIIs and DIs were net buyers yesterday to the tune of 426 and 233 crores respectively. FI long short ratio for index futures is at 41.42 on a net basis. This as they purchased about 45,726 index futures. On the stock futures front, FIs have sold to the tune of 3,950 contracts, while on the options front, FIs bought 1,62,669 call contracts, and they simultaneously purchased 1,58,557 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast. Wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.